Mr. Speaker, it's really unfortunate that we have this kind of conversation where we are talking of the health of Canadian and asylum seekers. The reality is those people are in the country and we have agreement. And our system, the health system is a compassionate system. So what we are saying is those people, they need to have access to health. And we are working closely with provinces and territories also to get more access to Canadian people.
Today is Thursday, February 26th. My name is Miloš Krajčnik. This is Canuck News. I have a story here I really want to talk about today. It's really tying into that Canadian sovereigntist narrative that I've been pushing, economic sovereignty and all of that. And it's actually reflected in our stock market. And guys, it's literally when American markets close, Canadian markets go to sleep. And so on the occasional days when we see the US markets shut down for holidays while Canada keeps trading, like American Thanksgiving, Memorial Day, Martin Luther King Jr. Day, the TSX becomes listless. It's crazy. The trading volumes drop, the price movements are slow, the market barely functions, and this wasn't simply true before, guys. So in the 1980s, the TSX operated almost independently when the US markets closed. Now it doesn't. Now it moves in stride, and that tells you everything you need to know about what happened to the Canadian economic sovereignty, guys, over the last 40 years. Jump into the article. Here's a new stock market adage for investors to keep in mind: when America closes, Canada dozes. On the occasional days of the year when the U.S. markets shut up shop for holidays while traders in Canada keep working, think American Thanksgiving, Memorial Day, Martin Luther King Jr. Day, the TSX can feel listless because increasingly it is. Going back to the 1980s, there's a long-term trend toward more subdued movements in the S&P and TSX Composite Index when the S&P 500 is on a break. According to our own analysis of the trading data, in the decade of the 80s, the typical daily move in the TSX benchmark index when US markets were closed was nearly 91% of what it was when the US was open. That fell to 65.5% in the 2010s. In the first half of this decade, it has dropped to 54.1%. The temporary TSX hibernation extends to volumes too. Between 2014 and 2024, trading volumes in Canada were 58% lower on US Thanksgiving, which falls on a Thursday, versus the monthly average according to BMO Capital Markets. Guys, and I think this is a great place to stop to really kind of unpack what we just read, because these last couple of paragraphs were really kind of fully loaded. Just to kind of re-quote that, I might even pull it up here. In the 1980s, guys, the TSX moved at 91% of normal activity when the US was closed. The Canadian stock market functioned almost independently, essentially. By the 2010s, that dropped to 65.5%, and by the 2020s to 54.1%. That's literally a 40% decline in independence over 40 years. 40%, guys. And what are the trading volumes? 58% lower on US holidays compared to monthly averages. You said you saw it US Thanksgiving on a Thursday, 58% lower in trading. The Canadian stock market literally hibernates when America is closed. And it's literally measurable sovereignty erosion, guys. And so like when I say this, I'm not like fear mongering, how we're dependent, how, we have a serious issue. We have made ourselves dependent of the US economy. Systematically, it's our fault. It's not anybody else's fault. It's our fault. And the free trade integration that we signed in 1988, the free trade agreement, and then in 1994, the NAFTA agreement, created a globalization of portfolio management, guys. And our economy began to funnel our expertise into the US. We started being a support system economy for the US, and this is how we've eroded our own economic sovereignty, guys. It is literally our fault. We have not developed our economy to be independent of the US to a degree. I'm sure in the 80s the US was still 90% of Canadian trade. That doesn't at all, wouldn't at all surprise me. But that's not the point. The Canadian economy used to be based on Canada, on Canadians. Now it's based on Americans. And this is where our exposure is. And this is why tariffs on 10% of goods going into the US hurts us so bad. It's because we're overexposed. So capital flowing from Canada, guys, to the US for 40 years. Canada literally chose this economic integration over economic independence, guys. And now the data shows what that choice actually is. Canada's stock market can't price discover without the US leading. It's not a partnership, guys. It's dependence. This all fits with research showing a general trend of stock prices moving in increased synchronicity in recent decades, particularly in international markets, says Bing Han, a professor of finance at the University of Toronto's Rotman School of Management. Pointing to the rise of globalization and financial integration, some studies argue that the US market is a more important driver of other countries' stock returns than local factors, he says. When the US market is closed, there's little news flow and no price direction. So Canadian markets can drift aimlessly during such periods. How can your local economy float aimlessly if another market is closed? That's how dependent we are. It's shown in the stock market, guys. And I don't want to be this doom and gloom guy, but the numbers are showing this. It's crazy. And so it says, likewise, portfolio managers have boosted their U.S. exposure over time. Canadian money managers are now much more heavily invested in the US than they used to be. So when the US markets are closed, a lot of money managers are also using it as a vacation day, says Alexander McDonald, a portfolio manager with Focus Wealth Management. What are we even talking about here? This is what I'm saying. It's because the US economy, the US market has been more accepting of capital, and there's much more innovation going there. And so even our entrepreneurs are focusing their efforts on opening shop in Canada, in the US, because there's just more capital there. There's more money being invested in creativity, in business creativity. And so people go there naturally. The whole world goes there because of it. Like even Elon Musk, he's a South African. He went to the US. He has an H-1B visa. You know what I mean? This is what I'm talking about. This is how you get the brightest minds. This is how you create that innovation. So it's not even a surprise that wealth managers are pushing stocks or acquiring stocks from the U.S. markets and not Canadian markets. But I want to unpack this a little more because I think it's even more detrimental than we think, because a U of T, guys, finance professor said the quiet part out loud. The U.S. market is a more important driver of other countries' stock returns than local factors. What does this actually mean? Canadian asset prices are determined by American market sentiment, guys, not Canadian economic fundamentals. And here's why. It's because Canadian money managers are now much more heavily invested in the US than they used to be. You can read it on screen. So when the US market closes, Canadian managers take the day off. Trading volumes drop 58% because Canadian capital isn't in Canada anymore, guys. And it's not just the portfolio managers. Canada's biggest banks are doing the same thing. TD Bank makes 40% of its revenue from US operations. TD is the 6th largest bank in North America, guys. It's not just in Canada, in North America. So it's a similar thing with BMO. Bank of Montreal makes 33% of its revenue from the US. And last year, TD's US operations collapsed. 82% earnings drop. Why? Because they were caught in an anti-money laundering scandal. $3.1 billion fine. And U.S. regulators capped TD's U.S. assets. And when TD's U.S. operations crashed, what happened, guys? The entire bank cratered. We felt it everywhere. It was a catastrophe. And if you have a TD mortgage, TD savings account, TD credit card, I do, your bank's health depends 40% on the US market. It's crazy. That's how exposed we are. And it's Canadian financial institutions, from portfolio managers to the big 5 banks, they're all betting on America, not Canada. This is a vote of no confidence in the Canadian economy by Canadians. And so when we see Mark Carney, Mélanie Joly, LeBlanc, all of these people touting, or even Doug Ford saying, "Oh, we need to do this, we need to do that." We can act tough in public. It's all a PR campaign for them. But the fact of the matter is, we are so overexposed. We are so reliant on the U.S. economy that rhetoric is just going to bite us in the ass. That's the hard truth. Because when your military, when your entire security apparatus is dependent on a country, and your economy is also dependent on that country, you aren't really a sovereign nation. You might be electing your own officials on how to deal with the power that protects you, but we're essentially under a protectorate right now. That's the uncomfortable truth. I'm sorry, guys, but it is. Otherwise, we wouldn't be that reliant on the U.S. Let's keep it going, though. There's one upside to all of this. Since the 80s, on the days when the U.S. exchanges were closed, the TSX ended in the green more than 72% of the time, compared to 54% when the S&P 500 was active, albeit with a modest average gain of 0.25%. So, guys, I mean, there it is again. The article tries to spin this as a positive, but quite simply, when U.S. markets are closed, guys, the TSX goes up 72% of the time. Yay. How much? By a quarter of a point. That's nothing. It barely moves. That's not independence, guys. So that's what happens when there's no one driving. Here's what this actually means, guys. Canadian asset prices are literally determined by American market psychology, not Canadian economic fundamentals. If the S&P 500 crashes, the TSX crashes, regardless of whether Canadian companies are profitable. It's regardless of whether the Canadian economy is growing. Canada has no circuit breaker. We have no independent valuation mechanisms, and the exposure is real. We're overexposed, guys. It's everywhere. The TD Bank has $40 billion in U.S. commercial real estate loans. If the U.S. commercial real estate market collapses, guys, which many analysts actually think will happen, TD will lose billions. What happens then? What happens if TD loses billions in BMO? What happens? RBC is there as well, and so is CIBC to a lesser degree. But what happens if that happens? Your TD savings are going to get squeezed. Mine will. Your mortgage rates are going to go up. Your credit card access is also going to tighten because TD's balance sheet is underwater from U.S. losses. What's going to happen? A taxpayer bailout. This is what economic subordination looks like in practice, guys. 40 years of choosing integration over independence. And now, Canadian savings, Canadian pensions, Canadian retirement funds all rise and fall with American market sentiment, not Canadian economic performance. We have no checks and balances in Canada for our economic performance because it's all tied to the US. How are you going to tell American politicians from Canada, hey guys, treat the stock market a little better because our nationals are feeling a little hurt. We're feeling it in our pockets. Come on. What happens if the S&P 500 actually crashes and then Canadian retirement savings, RRSPs, take a hit? Who's going to be accountable for that? U.S. politicians? Really? Come on, guys. And so why does this all matter to Canadians? It's not about the stock markets. Stock markets are where the economy gets priced, guys. If Canadian companies get valued independently of American market sentiment, Canadian innovation doesn't get rewarded unless Americans are, or unless they care, really. Canadian resource development gets priced by American commodity traders as well. Canadian pensioners and savings rise and fall with American market psychology. Canada gave up the ability to have an independent economic valuation, guys. And here are the numbers. In the 1980s, the TSX moved at 91% of normal when the US was closed. In the 2020s, the TSX moved at 54% of normal when the US was closed. That's an independency trigger, guys. That's 40% decline in independence over 40 years. Trading volumes dropped by 58% on US holidays, guys. Why? Because Canadian money managers are now much more heavily invested in the US than they used to be. It's crazy. And it's not just the portfolio managers. It's the banks. It's the big five banks. TD Bank has 40% of its revenue from the US. The BMO is 33% of revenue. Canadian financial institutions don't believe in Canada But the Canadian politicians are forcing you to have this negative sentiment towards the US. But we should ask ourselves, how much of Mark Carney's portfolio is in the US and how much of it is in Canada? Or the same thing with any of our politicians. How much of it? Doug Ford, because he made the big ad. How much of it? They don't believe in the Canada that they're trying to make you believe in. They're betting on America. And when TD's US operations collapsed last year, 82% earnings drop. Canadian depositors felt it, guys. They felt it. And this is the result of 40 years of economic integration, guys. That's all I have for you guys today. Please let me know what you guys think in the comment section below. Like, share, and subscribe. My name is Miloš Krajčnik. Stay informed, stay curious, and God bless Canada.
This is Canada. Maple syrup and like cabin say. Kick your ass all hockey season, eh?